Welcome to another episode of Buyouts, Business, and Bourbon. And we're very excited today for our guest, Mark Kossow from Clark Hill. And we're going to be talking ESOPs, the legal aspect of ESOPs, Mark's journey into the ESOP world, and how he gets all his satisfaction out of employee ownership and working on deals. And we'll get to all that in a few seconds here. Mark and I have known each other for a while now. As many of you know, I started the Exit Planning Institute's New Jersey chapter as president and recruited Mark onto our board. Mark's been on our board since the inception and going on close to 3 years. So Mark's been a great board member and been great to get to know you, Mark, over the last few years.
Likewise, Jerry.
So I'd like to start today, and our audience is focused in on the whole buyouts and exit planning space, as you know. And Mark, why don't you tell us a little bit about your journey on the legal side, kind of where you
Yeah,
started, kind of how did you end up in the ESOP space, being this kind of renowned attorney in that space? Why don't you tell us a little bit about your journey getting there?
yeah, absolutely. I'll just stay where I am now, and I'll revert back and tell you where I started from. I'm a partner at Clark Hill, which is a large law firm, about 700 or so attorneys. We have offices all around the country, plus Dublin and Mexico City. I currently head up the ESOP practice group at Clark Hill. My office is based in Princeton, New Jersey. Um, I've been with Clark Hill for about 7 years or so, but I've been involved with ESOPs for a little bit over 20 years. And before I actually started my journey with ESOPs, I started out as a pure tax and ERISA attorney at a couple large law firms, in particular Fox Rothschild and Gibbons Del Deo, in the New Jersey offices. And I learned a lot about tax, a lot about ERISA, and also learned what I didn't like, which was being kind of like a service, a backroom service provider that would just, kick out memos on taxes and not have interaction with the clients themselves. And I really longed for that interaction. And as I was looking to make a move from one of those prior large law firms, I stumbled across an ESOP boutique law firm, and all they did was ESOPs. And at the time, I didn't really know what an ESOP was. I heard of it, but I had no real experience or exposure to ESOPs. So after joining that firm, which was SES Advisors, I just really fell in love with the concept of ESOPs, the sheer capitalism concept, where everyone gets wealthy or everyone accretes value, be it the business owner or rank and file employees. It just really resonated well with me. Um, and then after making partner and working at SES for 6 years, I decided to switch gears and try and open up my own boutique ESOP practice law firm. Um, it was called ESOP Plus, and there was 6 of us that joined forces and kind of just tried to make a go at it. ESOP Plus still exists today, but I decided that it was better for me to rejoin a larger firm, um, to really grow my practice. And I ended up at Archer and Griner, which was a regional firm, and I was there for a few years, growing my ESOP practice during that time. But I felt that bigger was better, at least in my mind it was. So ultimately, I ended up at Clark Hill, which is where I am today. And I can't say the path was long, but it was well rewarded, let's say. And I'm very, very
Uh,
happy where I am right
Sounds
now.
great. How many people at Clark Hill, Mark, in the ESOP practice?
There's, depending on how you count it, there's 5 diehard ESOP attorneys and like another 5 or 6 ancillary folks, be it tax, employee benefits, pure corporate M&A folks that help out on ESOP transactions.
Is there a certain area where you specialize within the ESOP?
So I would say that my practice is pretty much split down the middle. 50% of the time, I represent companies and selling shareholders. and the other half I work on representing ESOP trustees. And I can't say which side I enjoy more, because when you represent the ESOP trustee, you really are involved in shared capitalism. You're involved in trying to get wealth for rank and file employees, et cetera. And when you represent the business owner in the company, you're trying to monetize the business owner's investment in company stock. Let them take some chips off the table and let them transition, if they decide to someplace outside of their corporate practice. So it's equally rewarding in either respect.
So, Mark, when you talk about both sides of the transaction, educating our listeners, there's always two sides on a transaction. You have a seller and a buyer. Mark, as he just mentioned, is on both. What are the legal considerations that kind of govern ESOPs, and what should business owners be looking to accomplish prior, from a legal perspective, prior to entering this transaction, which, as you know, can range anywhere from 3 to 9 months to kind of get a transaction done, depending on the
Right.
complexity and the nuances of the transaction. But what should owners be doing, you know,
Yeah.
prior?
So your first question was, legal aspects that govern ESOPs. I would have to say that an ESOP, an employee stock ownership plan, is designed to invest 100% of their assets in company stock of a privately held company. Um, and just like a retirement plan, any like a 401k plan or other types of retirement plans, ESOPs are governed by ERISA and tax law. And one of the legal requirements basically says that the ESOP cannot pay more than fair market value for the stock of the company. So the business owner can get fair market value, but cannot get a premium, a synergistic premium above and beyond fair market value. And people might think for a second that, well, why don't I just sell to private equity or a third party buyer that can offer, let's say, a 10% premium above fair market value? And the short answer is that may not be the most tax efficient way, because ESOPs, uh, when you sell and the company is a C corporation, ESOPs, the business owner can make what's known as a 1042 election, where the business owner pays zero capital gains tax on the proceeds from the sale. For example, you sell your company for $30 million to an ESOP and you're a C corporation. You make a 1042 election. At the end of the day, you're going to capture $30 million of sale proceeds. You don't pay $5+ million in capital gains tax. You capture the full 30 million. You sell the same company to private equity, and the private equity is saying, you know what, we're going to give you a synergistic premium 10% above fair market value. We'll give you $33 million for this company. It doesn't matter, because 1042 is not available in private equity. So at the end of the day, you're going to capture south of $30 million. So you're better off selling to an ESOP. And that's just one piece of it. There's a lot of other considerations why you would sell to an ESOP.
I mean,
Um,
taxes are many times in the top three. So if you talk to business owners and you're really quizzing them on, what do you want to do? You want to sell? Do you want to stay involved? People look at how much control they want to keep. Do they want to keep some stock for family members? They want to sell partial. And then taxes always come into play. And especially, living in New Jersey, as we do, Mark, that the capital gains tax in New Jersey at the highest rate is 11. So 11 plus your 24, you're looking at 35% in
right. It's
taxes
big.
paid in the state of New Jersey, which, obviously there's people, doing ESOPs all over the country, so all state specific. But I could see where that's a major consideration. So you see, as you know, Questar, my firm, does 1042 for ESOP clients, and we're intimately involved with that process. But when you see clients and we're talking to them about how to structure a deal from a legal perspective, do you see clients kind of balking at going from their LLC or their S corp status today into making that C election? Because once you make that C, you save the taxes on the sale, which can be considerable, as we just
Right.
noted. But then you're also possibly looking to revert back in 5 years, right?
Right. And let me just start off by saying the reason why you want to revert back to S status, because an 100% S owned ESOP is the most efficient, tax efficient way for the company's perspective. As corporations that are ESOP owned pay zero income tax. And the reason for that is an S corporation, as you might know, is a pass-through entity, passes the income liability, tax liability up to the shareholder. But the shareholder is an ESOP, which is a tax-exempt entity, which pays no income tax. And by having the S corporation not have to kick up distributions to the shareholder to allow the shareholder to pay its income tax liability, effectively, the S corporation is tax-free and can accumulate additional dollars year after year on a tax-free basis. Tremendous, tremendous competitive advantage for this S corp ESOP, because the company can now use those extra dollars to pay off debt, to make acquisitions, or just reinvest in the company. Um, so in terms of um, business owners or companies balking at the fact that they don't want to, you know, make a C corp election and then wait 5 years to reelect S status, which is normally what it takes, there is some give and take that has to be considered in that calculus, in that analysis. What's in the best interest for the business owner versus what's in the best interest for the company, and there's some give and take in that thought process.
Gotcha. That makes sense.
Yeah.
Hey, Mark, what do you think is when it comes down to the wire and you're trying to close a deal, are there very common things where obviously the valuation probably is your number one? I'm guessing the number one, coming down to a number that both sides are satisfied with a final valuation. But are there a couple things at the end that you're always negotiating on most deals? Is it valuation or is it anything
Well,
else that?
value is always a big driver. Indemnification provisions are a big driver as well. Um, Deal terms, whether or not you're going to require employment agreements, non-compete arrangements, that's
Mhm.
always a criteria. The governance provisions, the board of directors, trustees always like to see at least one independent board member be
Mhm.
comprised on the board of directors, whereas business owners, tr- small privately held companies traditionally just have insider board members. So to get them into the mix of hiring at least one independent board member is often an uphill battle, but it benefits both the company and the ESOP trustee.
What is the
So
norm? What is the norm, Mark? Is it like 40% or 30% of the board is
I think
outside? Or
it's like 30%. That would be independent directors. So if you have three board members, at least one will be an independent. And if you want five, maybe two.
but I imagine the independent trustee that you're bringing in on this case is going to have an opinion on what they want to have, and then it's all negotiated like anything else, right?
Well, the independent trustee will have the ultimate vote in who sits on the board of directors. So you have a nominating committee that can nominate the slate of board of directors that are going to be considered for appointment to the board, but the ESOP trustee has the up or down vote whether or not you're going to actually take a seat on the board. And because of that, they have influence over at least the independent board member.
Great. So let's talk valuation for a second. How involved do you get with the valuation, Mark? Is it more about just coming to an agreement between both sides and coming to a number that both are satisfied with, or how involved do you get with the valuation itself on both sides?
Um, I'm fairly very involved in the term sheet negotiation, which involves not only valuation but the deal terms itself. And the way things kind of flow out is that the company and the business owner will put the term sheet in play. They will put the offer amount in play, and the ESOP trustee will take that term sheet and review it, hire their own valuation advisor who's going to come up with a range of value. And then the ESOP trustee and the company are going to negotiate the terms of the term sheet, including the value. And that takes several weeks to accomplish.
Mhm.
And once we land on final deal terms from the perspective of the Department of Labor, it really demonstrates an arm's length transaction and really better protects the ESOP and the company from potential lawsuits in the future from the DOL, if you will.
Yep,
So
that
the
makes
process means a lot in terms of negotiating a deal. Even if the deal is a sweetheart offer, you have to negotiate it back
yeah,
and forth.
that makes sense. You know what's interesting, Mark, is a lot of times you talk to these business owners and they will want to bring in their own attorney, their own corporate attorney to do the deal, right? Like, oh, my person knows ESOPs. He says he or she knows ESOPs versus somebody like yourself that's a seasoned, almost ESOP only attorney. Um, how do business owners kind of get their arms around just the reason to have an ESOP only or really an attorney just focused on ESOPs to represent him on a deal like this? Because many times, as you know, and it goes the same way with CPA firms. A business owner may have been using the same CPA firm for 20, 30 years, and they're very comfortable with them for obvious reasons. And they don't want to use an outside CPA firm to kind of get the ESOP deal done. They'd rather just use their own people. And it's the same with the lawyer. So, what would you say to a business owner that really wants to use their own attorney, even though he or she may have to kind of learn ESOP law to get a deal done?
Yeah, that's a huge mistake if they're going to want to use their general corporate attorney. And a lot of times I'll lean to the investment banking firm that's kind of orchestrating the deal itself. And I will lean on them to put a little pressure on the business owner in the company to say, hey, you really need to look to an ESOP company counsel to help you out with this deal. Um,
Because the
it
trustee
just
side
doesn't
will
make sense.
always have an ESOP attorney. Will
Trustee
never.
will 99% of the time, trustee counsel is going to hire their own counsel, someone that specializes in ESOPs. Every now and then you get a trustee that thinks that they can be their own attorney. And I've seen that in the past where the trustee forgoes having counsel and they act as their own counsel, which arguably doesn't make a lot of sense, but you could save a fee in that respect. And sometimes that comes down the road.
Yep. So, Mark, when it comes down to a typical ESOP transaction, you have this loan that's funding the cash at close for the owner. And let's just say for a transaction that might be $30 million valuation firm, like you mentioned earlier, it might be for the owner, say $6 million cash at close with $24 million structured as seller's notes, for an example. The $6 million cash at close is funded from a loan, typically from a regional bank that specializes in then giving ESOP loans to companies to fund this. Do you get involved with the legal aspects of negotiating with the banks, and what are the banks looking for, and what does that look like?
Yeah, my team is intimately involved in bank financing for ESOP transactions. Um, so there's, as you indicated, there's bank financing and seller financing. My focus really is more on the seller financing aspect of a transaction. I will defer to my team member to help out with the bank financing. But if I can just talk a little bit about seller financing, because every seller financing deal, the ESOP company has to be cash flow sensitive. And if you make the coupon payment on the interest rate for the seller notes too high, too rich, you may run into cash flow constraints for the company. And because of that, what we like to do is combine a low interest rate seller note, call it 5%, with warrants attached to the seller notes. And what that means is on a year to year basis, the company only has to pay 5% interest um, to the selling shareholder. And at the end of the day, the selling shareholder will cash out and get warrants. And if you do a present value analysis as to what all that is equates to in terms of total return, the selling shareholder can walk away with a total return of about 12 to 13%, which is really good, really competitive. But again, it's cash flow favorable for the company by structuring it with warrants and a low interest rate seller note.
Yeah. So it's succession planning you kind of get involved with as part of the deals as well, because many times the business owners wants to stay involved with the business for a while, but they want to make sure that their succession plan is in place, that the key executives kind of they'll be running the company for the long haul, keeping the legacy in place and all, are rewarded with getting stock allocations every year and getting the value increase benefit by structuring with SARs and warrants. Yep. That makes good sense. Um, any pitfalls that companies face when establishing an ESOP? Anything that's
Yeah, besides what I mentioned with the cash flow sensitivity,
Hmm.
the ESOP transactions are normally a change in ownership transaction, which means you need to get the consent or approval from banks, landlords, or OEMs, which are manufacturing firms. And you don't want to go ahead and proceed with an ESOP transaction without getting these approvals, because otherwise we'll have a breach of a bank covenant, breach of contract, or just messing up your lease arrangement. So you have to be cognizant of getting consent and approvals here.
Gotcha. That makes sense. Any success stories? Yeah, I'm sure you
Yeah.
have many, many success stories. And I know we worked on a recent one together that was a great success story of a company that's been around for a long time that successfully sold to an ESOP. But I mean, is there one or two stories that kind of really stand out to you over your history of
Yeah,
doing these
a
transactions?
couple of years ago, I did a very large ESOP transaction with a car dealership. At the time, and I still think it's the case today, it was the largest ESOP transaction with a car dealership in the country.
Did
The
you
the
end
deal
up
was
with BMW or something? Is that why it was so good?
I
Or
didn't
okay.
but the deal was for over $450 million, and there were 600 plus employees. Business owner took 1042, super happy. The employees over the next 5, 6, 7 years are going to reap tremendous benefits from this ESOP, and it was really rewarding. And I just think it was something for the record books, because there was a lot of issues that we had to deal with that were novel to car dealerships dealing with OEMs such as Hyundai and Toyota. They didn't understand the concept of an ESOP trustee. They got the construct of a trustee confused with someone that was actually actively running the business, and they just thought that a trustee had too many involvements in the business and didn't understand the business. So we had to deal with that in due course. But at the end of the day, it was a real success story. And then the other one, Jerry, you just listed it, was an agricultural business down in Texas that, Jerry, you were involved with setting up the 1042. This company had 250 employees or so, and they were very, very excited and happy when we introduced the concept of the ESOP to the employees. And it was a real success story for both the business owner who's looking to transition out of the business and all these employees. And it was, I don't know if you want to say a word or two about that, Jerry,
No,
but
I it was a
everything went
tremendous
well.
transaction all the way around
Yeah,
because it was a great, great history with the company, and the owner was excited to transition and was really ready to make a move out of the business, and he wanted to make sure he took care of the key executives that are going to be running the company for a long time. So they were definitely rewarded with the SARs as well as future stock allocations, and I think the legacy of the company will live on, and I think the employees, as most ESOPs, when you roll them out, the employees are kind of a little shell shocked on trying to understand what is an ESOP, because many times the employees don't understand what even an ESOP is, and all of a sudden they don't really own 100% of the company the day it turns ESOP. They get allocated stock every year. But what we do is we try to show, Mark and I as a team and the team on the ESOP transaction, try to show what the employees are going to look like in potential wealth over a number of years if you stay with the company. And as you know, retention is always huge on ESOP cases and ESOP companies. So no, it was a great case to work on.
agreed.
Anything on a challenging side, say a deal, Mark, that you put a lot of time and effort into fell apart at the end, or a bad out.
Well,
I,
I would say
I think that's a bad outcome.
this dealership almost fell apart because these OEMs, these Hyundais and Toyotas, like I said, didn't understand what an ESOP trustee was. And the workaround was we negotiated with the OEMs that as soon as the ESOP transaction concluded, was over, the independent trustee that doesn't know a lick about the business is going to resign, step down, and was replaced by three insider executives. And these executives obviously know how to run the business. They don't know anything about ESOPs. So the workaround was we made the independent professional trustee, who now stepped down, is no longer the trustee. We made him a special fiduciary who directed the executive trustees what to do, how to accept an annual update, and things of that sort, things that required professional ESOP trustee thought. We made him a special fiduciary, and that saved the deal. And on a going forward basis, whenever I do car dealerships, I always suggest that we make the executives the trustee right off the bat, and have the professional ESOP trustee act as a special fiduciary in the background, directing those executives what to do in terms of the transaction.
No, that's interesting. Hey, Mark, do you want to talk just a few minutes about the DOL's role in ESOPs itself, and if you've ever been involved with any legal cases where the DOL gets involved with a case that you worked on, or anything you could talk about? Because as you know, they govern these, and if a deal got set up and the DOL didn't like the deal, they can sue the company, right? I don't know. You may want to see if we could
Yeah,
educate our listeners on kind of maybe how that works, because I'm far from an expert on that myself, but I'd love to hear kind of your take on
yeah.
how that
So,
all works.
so the Department of Labor, the DOL, is charged with the responsibility of oversight of ESOPs and protecting. They're designed to protect the employee, participants, and beneficiaries. And 99% of all cases that are brought by the DOL revolve around the notion that the allegation that the ESOP trustee overpaid for the stock of the company, meaning the business owner got too much, and the ESOP trustee was detrimented because it just paid too much for the stock. Um, and that is, in a nutshell, what the DOL really looks for in ESOP cases. They will start off auditing, sending out audit letters to the company, and if they don't like what they see, or after digging in deep, they don't like what they see, they're going to institute a cause of action against not only the ESOP trustee, but the company they bring into the cause of action, and the selling shareholder as well. Um,
It's
but
not
I'll
very
tell you
common,
this:
though, is it? Yeah, it's not
what's
very
what's
common,
that?
though, is it?
It's not super common, not at all, not at all. It's becoming less and less common these days. What is becoming more common, which is not super common, but it's becoming more common than the DOL, has to do with these class action plaintiffs lawsuits. And that is where a plaintiff's attorney engages a couple participants that are disgruntled, and all of a sudden they morph that into a class action lawsuit against the trustee, against the company, the selling shareholder. And all they're looking for, I think, is a settlement, because those cases never see its way to the bitter end. And it's, in my mind, class action lawsuits are looking for an easy payday. And unfortunately, the ESOP environment has seen its fair share of class action lawsuits in the last 3 to 5 years,
Interesting.
which is all the more reason to make sure your transaction is done, by the book. You don't take shortcuts, you document everything, and you have a full, robust negotiation with the term sheet. These are all good facts that will protect you against either the DOL or any potential class action lawsuit that may come
I
its
mean,
way.
that's exactly what we tell all business owners that are looking for an exit strategy, is that you need to bring in the A team. And if you're not willing to, pay the prices that an A team is going to charge, then it's not worth doing the deal to just save costs and go to the least costly provider, which may not
Yeah,
be on the A team. And I mean, that's what I always preach. And not everybody always listens, but I think that at the end of the day, you need building a quality team around the business owner is probably the most important part of this transaction.
I agree 100%. Penny wise, pound foolish doesn't get you very far in the end. You want to get the best team possible. Absolutely.
Is there any regulatory changes that you'd like to talk about in the ESOP space, Mark, that are interesting? I mean, I know we just
Well,
came away from the ESOP
past the
conference.
Yes, Congress just passed the Secure Act 2.0, which is regulatory changes that impacts all retirement plans, including ESOPs. And the time period you have in which to amend your plan document to comport with these changes is the end of next year. And these changes with as it relates to ESOPs touch on RMD payments, required minimum distribution payments, and force out payment rules are also impacted by the Secure Act 2.0. Um, Not a big heavy lift, but you just want to make sure your plan is compliant. Also, at the beginning of this year, the Department of Labor issued adequate consideration rules that were intended to serve as a safe harbor for trustees. The actual implication of these DOL rules was the direct opposite. They created a lot of potential problems for trustees. Fortunately, the Trump administration withdrew these rules back in January, February this year. So we don't have to worry about that, at least not for the time being, and hopefully never, because those rules were pretty horrendous.
That's good to hear.
Yeah.
So, Mark, what keeps you passionate about working on future ESOP transactions? Because everybody always says to me, "Why are there only 7,000 ESOPs? Only a few hundred new ones a year, and some get sold and some change over." But there's enough transactions in the space to keep you busy. It seems like these days. What keeps you
Yes, there
passionate?
Yeah, I'm very busy. I do like 15 to 20 deals a year. I've been doing this for over 20 years. Um, like I said before, I do half of my representations representing the company and selling shareholders, and the other half with the ESOP trustees. I'm really passionate about creating the concept of share capitalism and creating wealth for employee participants. I find that to be really rewarding because a lot of these rank and file employees will not get the wealth that they can otherwise get vis-a-vis participating in an ESOP. And by the way, ESOPs don't cost employee participants a nickel. It's a free supplemental retirement plan for all employee participants. So it's just the value add is an add-on that everyone should take advantage of. And again, for business owners, I enjoy helping them take some chips off the table, monetize their investment, helping them, uh, realize their goals, which sometimes is to retire or at least to transition out of the business. And I find that equally rewarding as well.
Yeah, it's a fun puzzle. This is why I'm incredibly passionate about the business because you get to involve a transaction, working with folks like yourself, get their estate planning all integrated, any charitable giving they want to do as the business owner. So it's definitely fun to work on all these planning aspects, being a planning geek myself. So no, it's great. Hey, Mark, what advice would you give to young attorneys, kind of trying to figure out in the legal environment kind of what to work on or what to choose as a path within, obviously many different categories within a law firm or in the legal environment?
Yeah. So any young attorney that has an interest in ESOPs, I would say this: ESOP law is a combination of tax, ERISA, and corporate law. And there are two types of ESOP attorneys. There's the corporate attorney that grew up learning corporate law and switched over to ESOPs and kind of try to learn tax and ERISA on the fly. And then there's the tax attorney that understands tax and ERISA and segued over to ESOPs and tried to pick up corporate law as they moved along in their experiences. And I think it's far, far easier to start your career off as a tax and ERISA guy and learn corporate law than it is to be a corporate attorney and pick up tax and ERISA once you're made the switch to try and do ESOPs. Just an observation. There's plenty of corporate attorneys that would disagree with me, but yeah, for myself coming up through the ranks as a tax attorney, I just found it to be an easier transition to be an ESOP attorney. To learn tax and ERISA up front and then pick up corporate law on the back end.
That's great advice. Hey, Mark, it's been great having you as a guest. I'm looking forward to working with you on many other ESOP deals and transactions. I have one last sort of ESOP question, but not really. So this is obviously a bourbon theme. I know that from being with you at some of our meetings, we're having a cocktail. Bourbon is not your drink of choice. I'll let you explain. But why don't you tell us what your drink of choice is?
I'm a beer and wine guy. I would choose beer any day of the week over bourbon. Unfortunately, Stella is in particular one of my favorites, but not a big bourbon person, unfortunately.
And what about wine?
Um, I
Red,
like
white?
I like red and white depending on what I'm eating. Steak dinner, I'll definitely choose red wine. Um, Otherwise, I'm a white wine type of person.
Awesome. Well, maybe we'll convert you to bourbon someday, Mark. It's not too late. All
Maybe.
right. All right. Thanks for your
Thanks.
time, and we'll see you soon.